Hello, everyone. Good morning. Welcome to, I believe, the fourth Lush AMA. Previously, we did these live, but I realized that due to the global nature of the community and the fact that everyone's different time zones, a much more efficient way to do this would be just to pre-compile a list of questions, which we've done this week, and then, do a recording which covers all of them, one by one, right? That way, everyone, can get their questions answered independent of whatever time zone, geographic location they reside in. So before we start, gonna basically go. This AMA is gonna go in kind of two steps or two phases. First step or first phase is when I'll go over the recent progress, the milestones, and the deliverables. And then after that, we'll end with a question section. Hopefully, I aim to get. I don't want to drag this on too long, but hopefully I get everything done within, 30 to 45 minutes. It's going to be unedited, unfiltered, all in one go. So here we go. All right. So regarding the recent progress, I guess the biggest milestones and accomplishments in the past month and a half are related to the fact that we, are at a point that we are monetizing our product, right? Which is actually, even though the numbers are small and we're obviously in the early stages, it's actually a very significant milestone, to be able to demonstrate that the product actually has users that are willing to pay money for it, right? So now that we kind of basically, solved or, answered this unknown of, of whether users are willing to pay for a product, the next steps in the near future are obviously to scale this up, by optimizing the unit economics, etc., right? And so before I get into the numbers, I know a couple of you guys, mentioned you guys want some kind of like trackable dashboard or something. So we'll try to aim to get a Dune analytics page up and running in the next month or so. It's just that we have a lot of other kind of obviously like in a startup, the most valuable resource is just the time, right? So we got other more pressing priorities, including very important features that I'll mention later. So we just got to basically triage the priorities, right? So, but anyways, we'll aim to get that up and running in the next month or so. But in the meantime, in regards to revenue, right? So uh, we are basically monetizing on our own internal platform as well as OnlyFans. So our own internal platform started monetizing around middle of August, and it hit about 1K in revenue in about 2.5 weeks. Currently, it has been on pause because we wanted to implement some other features and optimizations before we resume the paid traffic. But the traffic, resumed the last couple of days, and so we basically going through another iterative cycle where we, spend some money to get some paid traffic, measure the data analysis, and then repeat, right? And so, but on that kind of front, like I said. Started that during middle of August, went for about half month or so, so 2.5 weeks, achieved about 1K revenue, 1K in that half week or two, or sorry, half month, so 2 weeks time period. Regarding OnlyFans, we got an OnlyFans itself. Our model got an OnlyFans itself late August. That also kind of relates to the question of will we ever collaborate with OF? OF doesn't really, like it's not really a matter of collaborating with OF. It's a matter of getting our models on OF, and we've already done that last month. And so that's scaled from zero to about 700 to $800 of revenue in the last 2 weeks. And so that's about like our first month, right? So that's like, I don't know, you call that 1.5K, 2K monthly revenue on the OF specifically. Apparently, we're like in the top 15% of the creators already, right, in our first month. So again, all these are kind of good signs that basically validate what we're, building, and answer the questions of, whether users are willing to pay for our product, right? And so we are essentially we have been in for the past couple weeks to a month in a what I guess I believe someone from Y Combinator called it, right? It's like we're in a phase where we're essentially doing things that don't scale. What that means is that we are, going through the process of running these kind of small experiments of seeing what works and what doesn't, in terms of, how do you how do you track users, how do you track traffic, etc. Right? And so like I want to emphasize that, these numbers may be small at this point, but that's intentional because building a business from scratch. I've done this before, right? Because I built I'll go into this later, but I think I've been through this process of building, a trading system from scratch, right? From zero to, making millions. And I'm basically just reusing that kind of same playbook into scaling this business, right? But the point is here is that building a business from scratch or building a trading system from scratch is not really a random process, right? It's rather a systematic and quantifiable process that should be taken as from the approach of like a scientific process, right? Um, Now the question here is, how is building trading algorithm or trading system similar to building a startup? It's actually almost kind of identical, right? Because the startup process and trading process is simply a search for a repeatable and scalable system that has and generates positive EV, right? And so expected value is EV. And so in trading, for example, uh, basically trying to find a system where you can put one unit of risk in order to hopefully get $2 or $3 back worth of expected value in terms of returns, right? And again, the system can be completely quantifiable, and that's pretty much the same as building a business, right? Except in business, you're putting in $1, you're trying to build a repeatable system where you can put in $1 or 1 unit of cost and get 2 to 3 units of money back, right? But there's a smart way and a dumb way to build a system, right? The dumb way that a lot of people actually do these days, especially if they raise a ton of VC money, is just to try to scale before you're ready to scale, right? Basically throwing money at a problem and seeing what works and what doesn't, right? But there's actually a much more efficient way where you can just minimize your downside risk by running smaller experiments of for example, what we did in the past month or so was, we experimented with different kind of traffic sources and traffic providers, right? I paid this guy $250 to, run some traffic using whatever, for example, Instagram automation strategies. We hired, one or two kind of like people to manage a multitude of Instagram profiles for our girls. And then, after a couple of weeks where that data comes in, you can very easily tell what's working, what's not, right? And so you quickly cut what's not working, and then you double down on what is working, right? And for example, like it's the analogy of a sales funnel is actually very appropriate because if you're thinking about a funnel, right, you don't really need to pour a huge gallon of water into the funnel to know where it leaks, right? A simple like 1 or 2 cups of water, right, can tell you where the funnel needs to be patched, optimized, and fixed in order to make sure that water doesn't spill out, right? Water in this case is an analogy for users, traffic, conversions, etc., right? And so what we've been doing for the past month or so is pouring so-called little amounts of water into this funnel, seeing where the leaks are, fixing those leaks, repeating the process, and over time, we've actually, gotten kind of very positive results, right? And so, for example, um, the past example that I used of, various strategies that we tried, one of them, for example, like I mentioned, we tried to hire a couple of, human Instagram social media managers to run social media profiles for our girls. The ROI on that spend was definitely the negative, so we immediately cut that after, 1 month or so, right? But, we also experimented with, for example, running these automated Instagram marketing strategies using bots, right? And so, for example, we spent $250 on that. We actually netted $500. So that's like a return of almost 100, over 100%, right? So these, so like in addition to those, we've also experimented other kind of different traffic sources and traffic generation strategies. Some of them have breaking even. Some of them have, been in the loss. Some of them have generated in excess of, 100% in returns, right? Doubling our money. So based on that data, we can do another iterative cycle where we cut what's not working, reinvest the money into the methods that are working, and then scaling up from there, right? That's a smart way of scaling up. And so the reason why I think the results have been very encouraging, I would say, in the past couple months or so, or past couple weeks or so, is that one, like I said, we answered the question of whether guys are even willing to pay for our product, right? And answer was yes, right? And so the question now is, is this scalable? Is this actually profitable, right? Because we have actually expenses, specifically when it comes to paid traffic, right? And so I would say that I think it's a very positive sign that we're able to get to even just break even, um, not even talking about the strategies that we deployed that are actually profitable even now, right? Because you have to think in the context of like scale and unit economics, right? Right now we're running these small experiments, so like obviously they're much more expensive than what would the cost be if we, for example, we spent 2.5K instead of 250K for promotion, right? And so if we, increase our spend from $250 to 2.5K a month, that essentially drops our cost down by 40 to 50%, right? Simply due to economies of scale. And so strategies or promotion strategies that currently are break even will overnight result in a profit margin of 50, 60% simply when we decide to scale up, right? So I think it's a very positive sign that we're finding traffic sources that are even breaking even at this point. Because once we actually start scaling to, spending, 5K, 10K, 15K, 30K, et cetera, a month, the unit economics will automatically, transition into profitable strategy. And so we got to do this smartly and efficiently, right? At this point, we're getting a much better idea of the unit economics in general. So as I mentioned earlier, just hypothetically speaking, right? Let's say right now we are spending $1 in order to get 1.2 or $1.3 worth of revenue in, right? As we scale up, that $1 of ad spend or $1 of paid traffic, simply due to scale, drops to 0.7, 0.6, and then due to further optimizations with our system, that $1.3 that we take in might, grow to $2, right? So now you're talking about increasing the profit margin from 30% to almost 200, 300%, right, as we scale, right? So the point here is exponential growth is very powerful, but you want to build the solid foundations first in order to handle that exponential growth. Because if you don't, exponential growth or attempts to achieve exponential growth will inevitably probably destroy you, right? So I guess the other very important things that we've learned from these experiments that generate revenue are actually, what features and what improvements, like I said, that we need to develop and improve our product so that we can, optimize the conversions, increase the user retention, and and optimize the funnel, right? And so one of the examples that I mentioned earlier was that, not necessarily I didn't mention this earlier in this AMA, but I mentioned this in the previous AMA, in that the concept of a subscription is, I think, very attractive to people because who doesn't like the idea of like recurring monthly income, right? But I think based on, the user data that we've seen and just based on basic common sense, this business specifically is a very Pareto distribution kind of like business model. And that in the context of like Pareto distribution means that it's what we call, the 80-20 rule, right? 20% of people spend 80% of the money, 20% of the effort results 80% of the results. Same in this business model, right? And so what that means is that for a girl or for a model to get to, 10K in earnings a month, she's not going to get there with 1,000 users paying her a $10 subscription. What's actually going to happen is that 10 whales are probably going to spend $1,000 a month. That's how she gets to 10K, right? So if you, for example, try to impose a subscription-based model on these guys, that's the risk of turning away those whales before you've established rapport and established conversation is not worth the risk of just $10 a month, right? Because the risk of losing that whale is an opportunity cost of potentially up to 1,000, right? Not to mention the whole concept of subscribing to a girl or a model that you want to talk to is very unnatural, right? Like I mean, it's very common sense, but again, it's people overrule common sense with just the attractive nature of trying to enforce subscription-based payments on everything, right? If you find a girl very attractive, if you find someone very attractive, you want to get to know them and talk to them, it's like it's a very weird content to subscribe to them, right? It's like because then you're like this isn't like a magazine or like like a TV show you subscribe to. You're like a person that you want to generally engage and get to know is not something you subscribe to, right? And so by going from what we were trying to previously, which is, impose a subscription, a monthly subscription, to just going free subscriptions, we've actually increased, the monetization potential of our application, right? And this is what I mean by using user feedback and data analysis to improve the product, right? Removing the subscription based system to a free subscription based system that monetizes purely through in conversation gifts and unlockable content. That's an optimization, right? There's also small optimizations that you may not necessarily see, but for example, the registration process, right? How do we get that down from a process that takes 5 to 6 clicks down to just two or three, right? So those little things, those little optimizations, all add up here and there to create a much more kind of approachable, much more friendly user experience, and that obviously results in higher spend, increased conversions, etc. Right? Obviously, another example is like an email notification system, right? If a message goes unread, our system will send an email to the user, and then a good amount of them just come back and check their messages because of that, right? Um, and so, yeah, so that's basically a summary of what we've been doing the past, month or so, right? The numbers, like I said, are small at this point, but we've basically de-risked the business and a fair amount, and answered, you know, got answers to some very important questions, right? One being is obviously is does this product have product market fit in the sense that it's something that users will pay for, right? Do we have a better sense of the unit economics at this point? Yes, we do have a sense of that as well, right? And so going forward in the next month or two is all about optimizing the product even further, while improving unit economics to the point that we can exponentially scale this thing, right? Because it's like I said, exponential growth is very powerful, but the proper foundations must be built, or else you risk burning the whole system down, right? In that context, I just want to re-emphasize that because I want to, a couple of you have obviously mentioned how to test the product, etc. I want to emphasize that LushChat.ai is a product that we built specifically for investors and Web3 natives to test out the product, our systems, etc. Right? The actual platform that we're actually monetizing on is actually Cupidly.com. The reason why I want to keep those separate is that obviously the user behavior of someone who's trying a product from the context of an investor is very different from the user behavior of a guy who's actually willing to spend money, who's falling in love with this girl to actually talk to her, right? And so we don't want to commingle those, because that's just like a mix of, that just mixes up the user feedback and user data, and just causes kind of like issues. And also the fact that, the two platforms are slightly different in the sense that, for example, on Cupidly, which is our monetizable, our platform that actually monetizes the users, if you don't spend on the girl, she's not going to keep talking to you forever, right? Because why would you keep giving the guy attention, rewarding the guy for not spending by giving him more of your attention, right? And so, like, tapering off attention if the guy is not willing to spend, is what we do on Cupidly. And if you approach Cupidly from a sense of investor, you're going to be like, oh, this product is kind of broken because it's not working. But that's actually intentional, right? Because you don't want to keep giving the guy what he wants if he's not willing to spend, right? Because then he's conditioned into thinking that he doesn't need to do anything. He will get all this kind of like attention from the girl, right? Which is what actually we don't want, right? Um, the other thing, obviously, is the token relaunch that took place last week. We're still in the process of trying to update our information on CoinMarketCap. But as of now, based on community feedback, we did the token relaunch to remove the token tax. So right now the token trades without a 3.5 tax mechanism. Yeah, I mean, a couple of you guys have said the price action is not the best. It seems like a few people have capitulated after the token relaunch, and that's fine, because it's much better that the tourists, capitulate these prices rather than later, because $1 that will get $1 of token or buy demand that gets reabsorbed now. It's much better than having to spend $10 to reabsorb that supply 3 months, 5 months down the line, right? So I'm not really concerned about the near-term price action, as long as the fundamentals of the projects are sound. That's the most important, right? So that is a summary of what's been happening in the past month. Now I am going to shift over to the questions phase of this AMA, right? And we're about 20 minutes in, so that's kind of perfect on timing. First couple questions relate to the social media presences of our Instagram models, right? Or our AI models, only, specifically Anna, right? The first question is Anna's social media pages and traffic growing at an anticipated rate? Why only one Instagram page? To answer that question, actually, we don't have only one Instagram page. We have, at this point, 30 to 50. You just don't see them because we basically just use our main Instagram profile as an example, and that's about 34K followers. That's grown from 27, I think about 25, 26K followers to 34 in the past uh, month or so. So that's kind of like been a mix of organic and paid traffic. So I would say yes, the traffic on Instagram is growing as anticipated. And we're working with paid promotion, Instagram kind of marketing bot services in order to drive traffic. And that's what I mentioned earlier, how one of the traffic sources that we monitor the dollar spend, right? And see if we're generating, a good return on investment on that capital. And yeah, they're growing organically, they're growing nicely, and we get traffic on Instagram like pretty much on a daily basis. Are we close to releasing other models? When new models? So this relates to one of the most important features that we're going to be working on in the next couple of weeks, and I think it's going to be honestly the feature that takes this project and this kind of business to the next level, right? What we're essentially doing is we're basically the catchphrase or the value proposition is basically clone yourself into AI and start monetizing your audience 24/7 with your AI clone, right? So what we're essentially doing is we're building infrastructure now to basically onboard human influencers into our system by building a workflow that they can immediately clone themselves within 5 minutes, and then be able to basically, for example, link to their, Cupidly page on their Instagram or TikTok, etc., and then that will basically essentially drive traffic to our platform, and then everything is automated from there, right? And so essentially, the problem or the challenge that we're trying to solve for these content creators and these influencers is that most of them, the vast majority of them actually, are obviously very attractive girls, models, etc. Their demographic is probably 75, 80% men, right? And so there's so much like messages that they're simply unable to handle. All these guys are like very lonely guys, right? They just want some kind of feminine attention. And what better way to service the guy's needs than to build an AI clone of yourself, right? The whole point of what we're doing before is that we basically prove our system by monetizing our own model and then simply scale. There's two ways to scale, right? You can scale in the context of driving more traffic to our internal models, such as Anna. Another way to scale is to onboard existing humans with their existing following into our system, right? So there's two ways to scale, and we're beginning to build the workflow to handle the process of onboarding actual real influencers and building them essentially an AI agent that will essentially monetize their predominantly male audience, right? Once a cloning process is live, next question. Once the cloning process is live, will there be any active recruitment process in order to attract models? Yes. And so we already have two or three established influencers, 20K, 40K, etc. followers that are open to testing on a product, or essentially as like the beta test users. Again, this goes back to scaling, right? We don't want to immediately open our platform up to the entire world at the very beginning, right? So to make sure if we can't handle if our system can't handle two or three of these human influencers, there's no way we can handle hundreds, right? And so quickly we're going to do like a beta test um, from these early adopter users based on their feedback and the user behavior from that. Continue to iterate the product, and then when we're ready to scale, we're opening up to more and more models, right? Um, let's see. What's the token marketing roadmap once market conditions are favorable? Are KOLs ready to onboard partnerships, expanding token markets? General information regarding KOLs, right? And so yeah, so let me answer that question just as like a broad overview of the Web3, crypto markets right now. Obviously, for the past 6 months, the entire crypto market, well, not Bitcoin itself, but generally speaking, the entire altcoin market has been a bear market, right? And so the it's not very capital efficient to throw money at KOLs right now because no one is actually that's probably generating like close to zero return on investment, right? But in the bull market, I remember January, February, March, that was very effective, right? We could easily onboard KOLs, and by the way, we have never, and we do not anticipate ever going down the process of just giving, free tokens to KOLs, right? Every single KOL we onboarded during January, February, March, etc. Every single one of those guys has put skin in the game by, putting their own money in, right? Maybe we offer them a discounted, OTC deal because they provide value by driving attention, but in no way are we, just going down the path of giving free tokens to people, right? And so once the crypto market picks back up, historically in Q4 and Q1, we can go back to, revisit these, KOL related marketing tactics and marketing strategies, right? That's no problem. But the whole point is, having by 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 that point, I hope the business is in a much more stronger position where we can say, hey, this is a profitable revenue generating business, and that makes it much more attractive for a KOL to get on board, right? Because uh, there's countless kind of vaporware projects out there that generate no revenue. I think a product that generates revenue is very rare in Web3. I think that will stick out, right? And so before we get to that point, I want the business itself to be in a much more stronger position. And it's not like we have a choice anyways, right? Because if we blow money on KOLs right now, that's like I said, going to produce zero return on investment. In a bull market, in Q3, in Q4, Q1, that should uh, be a much more effective marketing tactic on the Web3 side, right? And we already have one or two guys that I plan to onboard. Um, but the timing is everything, and we're just waiting on better, market conditions to do that. Some people have asked for snippets of the project or the product. You guys can check out lushchat.ai anytime, right? It's operating 24/7. But just to reiterate, lushchat.ai is supposed to be separate from cupidly.com. Do not go to cupidly.com to test out the product and stuff because, like I said, if you don't spend money on that, you're gonna get ghosted, right? And you're gonna think that's there's something wrong, but that's intentional. And so lushchat.ai is the place where you want to get a snippet of the project. Do you have plans to pay with Lush tokens to get incentive, discounts, burn, etc.? I've answered this multiple times in the past, and I'll answer it again. Just because we are a blockchain project, we should not force people to use our token to transact because you have to think about it. Like the vast majority of the end user in this business, in this sector, are traditional Web2 people that don't even know what crypto is, right? And a token does not need to be a medium of exchange to have value, right? And so you look at a project like Polymarket, right? It's a blockchain, a crypto-based project, but the blockchain component is completely abstracted away, right? We don't need to imagine this guy, he just wants to talk to this girl. Now you have to teach him buy a MetaMask or download a MetaMask wallet, buy some token Lush tokens, and then they pay the girl on Lush. It's just extremely user unfriendly, and we don't need to do that because there are much more efficient ways of driving value to the token simply than forcing people to to transact in the token, right? And I'll cover that later. And this actually, well, I'll cover it now actually, because the next question talks about this, right? When will we see activity on the platform related and reflected in token? So, the 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 path to driving value to the token is that we take payments in Web2, right? We bridge those proceeds on chain into stables, and then we distribute value to token holders through either like a buyback model or a staking or rev share model. But again, I have to be very careful with the legalities of what I say because I don't want to get in trouble here, right? There's a proper way to do it, and there's an improper way to do it. But the point is, you don't and you should never cause user friction by forcing people to transact in your token. Um, and so I think people think Web3 being a Web3 project means that, we have to like impose Web3 on people, right? But you actually, if you actually think about it, the entire Web3 market or Web3 economy is a drop in the bucket relative to the entire economy of like Web2 or traditional internet finance or the internet economy, right? The Web2 economy, right? What you want to do is extract value and produce and extract value from the Web2 economy and transfer that into Web3 instead of forcing the rules and restrictions of Web3 on Web2 people, correct? Okay, so the next couple of questions was from one of our guys in Telegram, primarily related to team structure, revenue sources, etc., which I already covered in the first phase where I discovered the recent, milestones, accomplishments, but I'll go over them again here. What are the revenue sources? The revenue sources are our internal only AI-powered OnlyFans platform, as well as OnlyFans itself. How much revenue are each of them making? Like I said, in the second half of August, 1K on our internal model, and then these past 2 weeks, about $700 on OnlyFans. Um, what are the structural costs what are the structural costs of the company? How are you funding them? Can you share an organizational chart of the company with the salary of each member? Okay, so like I'm gonna condense this into a very simple question, which is, what is the burn rate or cash spend of the company, and what is the treasury, and how are you able to fund it, right? Because I'm not going to go into details of sharing organizational structure of the company and the salary of each member. We're not a Fortune 500 company with like a hierarchical pyramid of like VP of sales, etc. Right? It's like a team of. I'll tell you the team what constitutes a team, right? We have two full-time engineers, about to be three engineers. On the Web2 side, we have an AI engineer. We have a guy who, has experience, like I said, managing OnlyFans agencies in the past. He works on the, chatting conversation side. We have me as the CEO role. And then we have a, very talented product designer that we onboarded 1 or 2 months ago, right? So it's a team of about 6 or 7 full-time people. And combining, the freelancers, the part-time guys, I would say it's like a full team of like 12 or 13 people, right? There is no organizational structure. Everyone just pulls their own weight, does what works efficiently in a flat structure, and just gets shit done essentially, right? What are the structural costs of the project or company? The burn rate about 1 or 2 months ago was 33K a month. That's dropped to 30K a month due to obviously the revenue that we're generating now, slight revenue that we're generating around, as well as optimizations in personnel and team, right? So we have a monthly cash burn of 30K and a treasury of 600K and 650K, right? And so we're like we're fairly comfortable in terms of runway. And so there's not really like urgent need to raise money, and we don't intend to, raise a private round anytime soon at these valuations. Can you share with us the decks that you're selling to VCs and institutionals? We're not we're not doing private rounds. We haven't done and have not done private rounds with VCs yet. We basically essentially just self-funded this project from the beginning. Fair launch and self-funded this project from the beginning, which I'll mention later on. That's actually going to be very important from a branding perspective. Can you share with us a business plan for the next 12 months? Of course, continuing to scale the business, um, and improve the unit economics, and then just grow the business, right? Like we've answered the question of are people willing to pay for the product, and now it's about scaling this, finding various distribution channels while continuing to optimize the product, right? What are the marketing campaigns for the next 12 months? So there's two approaches, right? Marketing and the concept of driving users to the project, or sorry, the users to the product, and as well as crypto native kind of investors to the project, right? As I mentioned previously with the KOLs, as crypto bull market picks up back up, that will be much more efficient. much more kind of like effective. And so as the crypto markets pick back up, we'll re-engage in that. And then it's a constant to on the context of marketing on the actual bringing users to the product. That's a constant, I guess, search, right, for more efficiency, for more sources, etc. Right? That's basically what we're doing for the past 12 months, or for the next 12 months, to continue to scale the product. And I would say, do not underestimate exponential growth, right? Because uh, it seems like, for example, the numbers are quite small at this point. We're, getting 2K in revenue. We're spending, 1.5K, 2K a month in order to attract that, revenue. But again, 2 to the power of 4, 2 doubles 4 times, and you're at like 1632K, right, a month. And so, like I said, having a foundation to support exponential growth is very important. What is the skin of the game for the key members? The skin of the game is I guess like our token allocation, where we haven't sold any tokens. Uh, can you share the number of Lush units? Yeah, the team allocation is 15%. Uh, we've, I can't, it's a free market, obviously. So if one of us or if some of us want to buy additional tokens on the open market, that's, up to the members of the team. I don't really track that. I don't even know their wallets. But all I know is a 15% allocation to the team. Not one of us has sold any tokens. What is the skin of the game for the key members? So yeah, that also relates to the cash burn of the entire project, right? So the reason why our cash burn is so efficient at 30K a month, even with our large team, is that well, one, I haven't luckily, fortunately for me, and knock on wood, I have fairly nice income streams outside of crypto in general. So I mean, I haven't paid myself a dollar in like 9 months, and that's fun. Any comments on let me get some water because I've been talking for like 35 minutes nonstop. All right, next question. And we're getting to the end here, but this is actually quite important question. Any comments on the competitive landscape, like what you're seeing peer projects doing, including some have raised money? How is this impacting strategy? So before I get into, fundraising, I want to say that, there's like a project. First of all, we are not doing the build your a dream AI girlfriend and engage in a fantasy role play, that business, right? That is a commoditized business, and that will become a commoditized business very near in the future. You have Candy AI, you have like Cupid AI, you have Nectar, you have like Character.ai. Like we're not doing that because what we're doing is we're building AI agents that are essentially serve the actual like that are indistinguishable from real people online and serve the same monetizable kind of like purposes of those influencers, whether it be, promotions, sponsorships, brand endorsement deals, or acting as your girlfriend experience, right? We're not doing like the build your dream AI companion. That's like that and that role play type of business model, right? And so um, before I get into fundraising, I would say that, you need to think in terms of chess, not checkers, when you're talking about fundraising. And before I get into what that means, I guess the best way to start is to basically go through a brief history of like the company life cycle or like the liquidity life cycle of like a company or a business, right? And so in traditional finance or Web 2 or like TradFi, the path the company life cycle or the path to liquidation is basically the IPO process, right? These companies start out, as like a seed based project or seed based business, raise, a couple $1 million, just do a Series A, Series B, Series C, etc., and then eventually IPO 5 to 10 years, after their initial kind of like business start, right? By the way, that process is going to be completely disrupted in the age of AI because the creative destruction process of building companies is going to be like exponentially shorter, right? Waiting 5 to 10 years for a liquidity event in order to, take profits on your initial investment is not going to fly in the age of AI, where businesses are probably going to, like live and die in like 2 or 3 years, 3 to 5 years, right? And so, but in essence, The reason why I explained the TradFi IPO process or the liquidation process is that, what essentially like VCs, crypto quote unquote VCs have essentially tried to replicate that model from Web 2 into Web 3. And the problem is that this creates extremely distorted incentives, um, mainly due to a lack of, I guess, like listing requirements, right? Like, for example, on in order to get listed on the Nasdaq, you have to like have they do a very due diligence process, right? You have to like actually have like a legitimate business with like, like a legitimate product, right? Doing significant revenue, etc. But the problem here is that in Web3, there's none of that, right? Like there are vaporware projects, I quote unquote TGE, which is starting their token trading on a listed exchange at billion-dollar valuations with minimal or no revenue and vaporware product, right? And so the VCs look at that, and it's essentially right. Like if I'm allowed to sell this product with nothing, that's essentially real value is probably worth only a few million, and I can list that on exchange at billion-dollar valuations, right? Obviously, that's going to create extremely distorted incentives, and it's going to create a system where people are going to exploit the system as much as possible, right? And so what you see in Web3 is that you have these fundraising rounds, uh, private quote unquote fundraising rounds where these VCs get in at $20 million, $50 million, $100 million valuations. Essentially a graded fool's theory, right? Because they know they can essentially dump this on the public markets at 500 million, $1 billion valuations, etc. And due to anchoring bias, right? Like even though the token is truly worth, let's say, 20 million, the fact that the token launched at 1 billion, if you're not smart enough as a retail investor, you get sucked into that, right? And then the VCs are just dumping all over you, and that completely wrecks the price, right? And so what you're seeing now is an extreme dislocation in value in the crypto markets between the private markets and the public markets. And like the markets are getting more efficient, right? Too many retail people have been just like uh, taken advantage of, I would say, in the past few years, where they're like no, with the point where like being marketed as a VC funded project is all it's almost like shooting yourself in the foot now, because no one is actually buying VC funded projects. Ask yourself, when is the last time you actually bought like a VC funded project or private deal funded project, right? It's because these VCs get in so early. Like there's no upside there's no upside when the token gets to a point where it's available for the public, right? And so people have gotten smart, right? I mean, the market gets efficient, and for that's a good thing, right? And the entire meme coin cycle that we've seen the past half a year or so is simply the free market's response to the disdain of VC funded projects, right? Because no one's buying these VC funded projects, and there's nothing else in their mind to buy. So they're essentially the pendulum has swung from one extreme, which is these high FTV, low float VC coins, to the other extreme of these kind of worthless, empty kind of meme coins, right? But that is also unsustainable because one, there's no barrier or moat, right? Like anyone can spin up a meme coin. If you actually did like a analysis of like pump.fun, I think only 1% of people make money, right? So people previously got obliterated buying these VC funded private deals, private market deals, tokens that go live at $1 billion valuations. They swung to the other side of the pendulum, which are these quote unquote fair launch meme coins. But they're also getting obliterated by the insiders and KOLs, right? So I think the pendulum will naturally revert to the mean, right? Do a mean reversion. And this is where I think for the next kind of leg going forward in the crypto markets, especially as the market gets more efficient, there will be a premium on you kind of like fair launch kind of utility tokens. So basically the tokenomics of a fair launch meme coin combined with the utility of a previously VC hyped and VC kind of artificially propped up kind of token, right? And that's what I want kind of Lush to be positioned as. I think going forward, the branding or the narrative of being a fair launch token with no VC overhang is going to be extremely attractive when the crypto markets pick back up again. Um, and so the let's see. I think as a just from like a market structure perspective, because I trade the market, so I'm like very interested in this stuff. I think the inevitable results of the market structure changing in this manner is that previous VC funds, previous private VC crypto funds will inevitably be converted into liquid VC funds, right? Because the private market valuations do not justify, these private deals anymore. And the actual discount and the value is actually found in these liquid markets, right? It will just take some time for the markets to, adjust or like adapt, but I think this is the inevitable kind of end, right? Um, so in order to go back to your first question of why I went through this kind of like rant or this kind of summary of market structure, is that there's a saying, right? There's like when you're in a race, you don't necessarily always want to be the one in front, right? Because the one in front, let's say you are like racing in like a NASCAR race, right? The car in front gets all the air resistance, all the kind of like, wind pressure against it, right? While the best place to be, it's actually just cruising along behind the guy who's in first place, right? It's not about where you start, it's about where you finish the race, right? And then surpassing him in the last kind of leg of the race. How that actually applies here is, and how that relates to the concept of thinking chess, not checkers, is that it's actually a very positive sign if a competitive or relevant project gets these overblown or kind of VC investments, right? Because what does that do? One, that validates the entire kind of, I guess, space or sector as a whole, right? This AI kind of companion, AI influencer, AI girlfriend, etc. That gives validation to the entire sector without screwing up the tokenomic structure of our own token. Because once a VC gets in your token, you're not obligated, let's say, but you're strongly incentivized to keep raising at higher valuations and ultimately open your token for public trading at, let's say, a significant multiple to where the last VC got in, right? Let's say the last VC got in at 100 million valuation, then you're strongly, quote unquote, encouraged to, let's say, start the token trading at 500 million, right? But again, that completely screws up the incentives and the tokenomic structure of your entire token, because now the VCs have all this upside and they're just dumping. It's like a exit liquidity, right? They're using retail as exit liquidity, right? And so, but however, right, I think my thesis of the future and how this relates to the market structure of how people are not buying VC tokens anymore. Like the fact that like people are going to see this overinflated VC token TGE or start trading at 500 million, and then we may be trading at, a significant discount to that. And instead of buying the VC token, the guy's psychology is going to be like, hey, this is a token that's trading at 500 million. I see Lush that has a equal, if not superior, in my opinion, by far superior product that's also monetizing, right? Instead of buying this overinflated token, let's buy Lush instead, because they don't have the VC overhang and they're trading at a small percentage, let's say 50 million relative to the VC valuation of 500 million, right? And so that VC funded project not only gives us validation, this sector validation, but actually acts as the magnet of our valuation to basically couple or like basically as pulls us towards a higher valuation. Meanwhile, we still maintain the very kind of healthy tokenomics of having none of these kind of heavy VC unlock overhang supply over a token, right? And so we basically, well, I mean, I'm fine letting these like other projects, they want to raise huge, they want to raise rounds at like, these valuations. I don't know what they're doing at, but that's fine with me because that's not screwing up our token structure, and that's giving the entire industry or entire kind of sector validation. And that is perfectly fine with me, right? Because one thing I learned from my, 7 to 8 years of trading is that the ownership structure, in this case, tokenomics and Web3, is very crucial, right? It's the in some cases, especially in a market of like euphoria, it's oftentimes more important than the fundamentals itself. You know, the fundamentals didn't drive GameStop from $3 to $100. Fundamentals didn't drive, VinFast, this Vietnamese EV company, to be worth hundreds of billions of dollars, right? It's a fact that their ownership structure had no overhang, supply overhang, and the fact that um, it doesn't take that much, capital to push price up if you're talking about price appreciation at this point, right? And so from day one, I've made a very important focus to always keep the token structure as healthy as possible. That's why I never give out free tokens to anyone, not even my friends. Um, and I'm again, I there's a very big difference between these private, VC funds versus a liquid fund that, buys after the token is available to the public, right? Because their cost basis is not relative to the general public, is not 100x lower, right? So they're not incentivized to dump on the public. And when the token, you don't have a $500 million valuation air pocket below the token price, because the token didn't start trading at 500 million, right? It started trading at 1 million, 2 million, and grew organically from there up to that valuation. It's a very different price trajectory because the price has been validated by the market through price discovery, right? So don't be afraid of VC, funded tokens. It's at best a double-edged sword in Web3, and it's increasingly becoming a case of shooting yourself in the foot because people, like I said, retail is not buying VC funded tokens anymore. Um, yeah, so what you actually want to target are, liquid funds, right? Funds that are not afraid to buy after the token's available, after the token is, being traded on the open market. That's what you want to attract, not the private, free free token kind of VC funds. Couple more questions. Is the launch on the AI-focused blockchain still happening? Yes, but the plans got pushed back a bit because, well, one, it doesn't really like the whole reason, the whole thesis of building a blockchain-based kind of like computational system is to basically scale our own kind of like application, right? So Lush is building our own kind of internal OnlyFans platform when we're generating, the content, etc. Right now, we have plenty of compute power, excuse me, etc., to build all the content, etc. But once we start onboarding external kind of influencers and such onto our platform, that needs to come first before building out this kind of blockchain-based compute system, right? So onboarding humans and onboarding kind of external influencers onto our platform, it needs to be one step before building out this blockchain-based network. But that's still in the plans for sure. How do you see the long-term impact of AI models on the fashion entertainment industry? Will they risk, will they replace human models altogether? So, I would say absolutely, but the timeline, I don't know, because I think what happens is that these kind of technological disruptions always happen at the margin, right? What that means is that it doesn't start off happening at Louis Vuitton, right? Because Louis Vuitton has a well-capitalized marketing firm or marketing budget, and which they can easily spend $5,000, $10,000 getting paying these influencers to take all these photos, etc. Right? They have the budget to do that. But your mom and pop shop, your mom and pop clothing store doesn't nearly have that budget, right? And they can't afford to even spend hundreds of thousands of dollars on these influencers and doing these photo shoots, etc. Right? I was talking to G Money back in the day. He spent like 50K on a photo shoot for his clothing brand 90cc, and he's like, yeah, man, like AI will essentially like reduce that cost by a factor of like 1,000, right? But that's not going to happen with these big brands. What's going to happen is they're going to start at the mom and pop shop. But I think AI in that sense is a very decentralizing technology because everyday people will take advantage of it, just as well as just has everyday people has the capacity to take advantage of the technology, as these large companies, right? And so like I said, it's only a matter of time before more and more companies shift over to AI generated content, advertising, etc. Right? Even music artists and Hollywood actors one day will probably be AI, or these studios will just license their image, right? Maybe Brad Pitt is a real person, but they'll license Brad Pitt's image and create AI avatar based on him, which is indistinguishable, from actually Brad Pitt, and he'll just get like Maybe he in the past he did a movie for like $50 million. Now someone will just a movie actor or movie studio will license his image for $10 million. So he's not making $50 million a movie anymore. He's making 10 million. But maybe now that he actually doesn't need to do these acting, maybe he just licenses his image and does 10 times more movies, and he's still making more money, right? Do you foresee the development of technology to allow AI models interact in real time with fans? So yeah, my thesis at the beginning of the year was that in 6 to 12 months we will have indistinguishable video, and with the release of Soar, with the release of Runway, with the release of all these Kling AI, we're actually seeing that timeline pretty much be on schedule, right? I think real time streaming will probably be 6 to 12 months from now, but that's definitely coming as well. And the last question, a fairly humorous question is, do you need male performers to film uh, for our AI models? The question is no, because what sells is actually, well, it depends on how you market your girl, right? But if you're marketing the very innocent, kind of shy girl next door, the guy who falls in love with her doesn't necessarily want to see her, bang some other dude on video, right? So what I'm trying to say is that solo content is more than enough for our use case. And that's with that, I think I've covered pretty much everything on this list. So yeah, I'll try to get this recording out as soon as possible. But thanks for everyone for contributing these questions. And hopefully these answers provide value to you guys. All right, take care.